to the sectors and geographies, the US leading the race, Asia catching up, the US, notably New York City, home to 30% of invested dollars in sports tech. And then when it comes to sector, you had the fitness and workout sector that was on the rise, along with the fan content and engagement and esports catching up. And I think this is where I want to take us is one constant that we've seen pre-COVID, during COVID, and if especially reinforced these days, and that we think is going to be even growing even more in the post-COVID world will be esports. And if you look at just some numbers of where we stand today when it comes to esports, Twitch has experienced a 20% growth of its viewership in the second quarter of 2020 compared to the first quarter, with an all-time high of 121 million hours streamed. And this is true for Twitch, it's true for YouTube as well. It's true for the game activity in general. Verizon has reported a 75% increase of game activity in peak times. And it's also true for traditional sports organizations and stakeholders that are creating new esports experiences for their fans that are sitting at home. If you look at what the Formula One did with a virtual race, if you look at when the NBA also is doing the 2K League, those are interesting examples of the prominent spot that esports is going to take in now in those times, obviously, but also in the post-COVID environment. So I just, before we jump into the talk with Lance, and we're very much looking forward to that, I just wanted to share some thoughts, and here at Colosseum, just try to identify what kind of mindset we could positively share when it comes to sports investors, and we have startups on the line, especially important for them. The first thing is that comeback. I mean, sports will be back eventually in some sorts, in a different kind of environment for sure, but opportunities for growth for sports tech companies will be there. And I think investors are very much aware of that. And so they're ready to hang on for a couple of months and then to be ready to be back on track. The second thing is innovation. This new momentum, this new environment in which sports is going to be for the next couple of months or years is going to for sure accelerate the need for new tech-fueled solutions for the industry. In different sectors, we've seen it with esports. You see with fans being at home and maybe remote games going on, you'll have the need for more tech-fueled solutions. And the final aspect of this positive mindset, I also think as whether you're a sports tech company or a sports tech investor, do you think that the sports industry should also be the main, but also one of many industries in which your solutions can be applicable? And I think what sports tech investors are especially likely to look at it, solutions that are applicable to various types of industries, and I find in sports some applications, but also in healthcare, in biotech, in fintech, in real estate, in different industries that also mitigate the risk for them and create new growth opportunities for the startups on the other side. So those just quick thoughts and that I wanted to share primarily to a conversation, and we'll dig deeper into that with first Lance and then Israel. The general idea is that in order to succeed tomorrow, you'll need to make the right decisions today as an investor, not miss on any opportunities as a company to make the right decisions to survive and grow in the future. So at Colosseum, just very briefly, we're here to help, notably with Winrise, our sports tech platform. We have a list of investors that you can scout, that you can look for. So feel free to sign up. It's free, and we want to help you out, guys, in those times. So let's just jump right in with our two conversations today. And first, I'd like to welcome Lance Dietz from KB Partners on the line. Hey, Lance.
Hey, Tim. How's it going?
Nice hey, how are you? Thank you so much for joining. It's a pleasure to have you with us. First question, Lance. How are you? And most importantly, how are the companies of your portfolio? Maybe if you can introduce KB Partners very briefly, and then we'll jump right in.
Yeah, sure. Can you hear me all right?
Yes, perfect.
Yeah, so KB Partners, Chicago-based venture firm focused on kind of seed to Series A across that spectrum. And with this intersection of sports and technology as our umbrella focus. And for us, the intersection of sports and technology covers a few different verticals. So I would say we lump most startups that we look at into 4 or so different categories. The first one would be what we call the connected athlete or quantified self, but broadly digital health, wellness, and fitness. Everything from elite performance to consumer health, and we've even looked at things kind of in healthcare around sports medicine. A second vertical is what we would call media and content, or immersive media and content in and around sports and adjacent sports categories. So everything from streaming technologies to AR and VR to general digital media. The third vertical is what we would call smart venue technologies. So things that enhance the in-venue experience for the fan or the operator, from crowd analytics to venue optimization, fan engagement, even forms of ticketing and security. And then the last main vertical is what we call derivative, adjacent, or non-traditional sports markets. So esports and gaming, sports betting and fantasy, for example. And so we kind of look broadly across those sectors. We think there's a lot of overlap within them. I think there's a lot of opportunities for sports in general to be a wedge to broader markets and broader categories. So that's generally how we look at it. And I would say, so we've made 9 investments so far over the past 2 years, probably more on the seed and seed plus side of things. We got another one in the hopper that hopefully will close here in a week or two. And those run the gamut. Some of those are going to be heavily impacted by COVID, have been heavily impacted by COVID because they're directly related to team sports. And then there's others sort of, we have a few investments in esports and gaming and a few in the health and wellness sector that, not surprisingly, are seeing a bit of an uptick now, as you mentioned, as more people are spending more time at home, looking for ways to engage. So broadly, we're seeing various things across the portfolio. And like most firms, I would say, probably twice as much of our time now is being spent with a portfolio, or has been in the recent past, to kind of shore things up. Yeah, and I think you're on mute, Tim.
Sorry about that. Yeah, how are you able to support your portfolio companies in those days? Because as you said, some of them might be heavily impacted by the COVID. Some of them may be requesting for your help as well to support growth activity because of the crisis. So how are you able to maintain that support?
Yeah, no, I think first is probably just distilling a little bit of what's going on, what's happening with kind of government support with the CARES Act, different parts of stimulus, and understanding where we should apply for those types of opportunities, where it makes sense and where it doesn't. I think the other piece is, startups are having to make some really tough decisions right now, in terms of what sort of expenses they cut, be it headcount or otherwise, what sort of customers they focus on. And I think just spending more time with them, talking about that, spending more time with people in the industry to get a feel for where that should happen, and really discussing strategy in the near term, like making sure that we can weather this storm, but at the same time keep the company, progressing in a way so that when this passes, they come out of it maybe in a better position than they otherwise would, or at least able to capitalize on kind of things reopening.
And so how do you see this capitalization of COVID opportunities? Or, I mean, maybe if you can just map for us the sectors of your portfolio companies that are very much heavily impacted and that have to make those tough decisions, and maybe some verticals that are less sensitive to this changing environment. Maybe you mentioned esports. Do you have an example of a company in this field that's kind of benefiting from those days?
Yeah, I mean, so I would say esports or gaming in general broadly is definitely kind of seeing an uptick. Like you mentioned, we recently made an investment in a company, more gaming than esports, but it's a labor marketplace for gaming talent. So it's a company called Rupee, early stage company. We invested alongside another investor, Convoy Ventures, out of Denver. I think what's interesting is you're seeing more and more people look for opportunities to engage with online communities such as gaming. What these guys are offering is a way for an industry in which hiring is very one-off, part-time, making it a better experience to actually for game studios, which you're seeing a lot more independent studios rise. A lot more people consider how they can, come out with more and new engaging games, like how they actually manage that talent in a time like this and going forward. So that's one that we recently invested in that I think has an opportunity to benefit from this. Then another one, a company called Asensei, so out of the Bay Area, is working on kind of connected coaching, a digital health, wellness, and fitness offering. And I think you see a lot of that spiking right now. People can't go to gyms, to where big brands are looking for ways to engage you and me at home through digital means. They've definitely seen an uptick as well. So those are two that I think have some tailwinds behind them. On the other side of the house, we've got a company that brings sports to corporates as a health, wellness, and culture offering. And right now, you can't play sports with people. And so, of course, they're impacted by that. But I think the ability for them to engage with their current customers and talk about what the future looks like when this does pass, and how they can be helpful there is where they're spending more and more time.
For sure. Now that's very interesting. And when it comes to, so that's about managing your current portfolio companies and seeing where you can assist. When it comes to scouting new opportunities, of course, we know those are times where the environment is changing at an unprecedented pace. But do you see any? Are you kind of switching your investment focus or thesis because of that, or if not, and if yes, do you see any opportunity for scouting new investment opportunities right now?
Yeah. No. So I think in terms of our focus, across those 4 or 5 categories broadly, we're not necessarily going away from those. I think we are probably thinking more and more about kind of at this time when it makes sense for us to spend in one category or another, right? I think we've just seen a lot more gaming companies recently, a lot more health, fitness, and wellness companies recently, just because they have some really good recent numbers to show. I mean, I think what's interesting, and Sports Innovation Lab has done some good work on this, is trying to better understand what it looks like for fans or sports to come back, and how coming out of this, people are going to be very skeptical to be in large groups again. And so how are venues managing that? You've seen a lot of companies with new technologies trying to find ways to make that experience less concerning, be it tracking your health or encouraging, social distancing. I think those are things that recently have started to get a lot more interest as well. And I think broadly, media and content, as you're seeing, athletes are spending a lot more time engaging directly with fans through different types of social media, through different types of, companies that allow you to interact directly with those fans and athletes and build brands during this time where they can't interact with them directly via games or something like that. And I think the idea of sports in general as a social experience, which that's gaming, that's traditional sports, I do think that after all of this is going to be something that people crave, this in-person experience. While we've done a good job of doing some of that offline with panels and events and so on, I do think that's an inherent nature of the sports experience in a lot of ways, is being able to you go for the game, but you stay for the party, which is a great thing that Andreessen talked about with games, which I think is inherent in traditional sports as well. So I think that's something to be on the lookout for as well.
No, for sure. I mean, we're all hoping, for better times to come in terms of the framework in which the sports will be back and the digital solutions will play a role in. where you mentioned some of examples, stadium security, stadium health conditions and social distancing. Would you have any kind of recommendation for maybe some companies that are active in those fields that might switch their focus to adapt to this environment? Should they adapt for the short term and then pivot later back to their business, or how would that play out from maybe a growth perspective, but also an investment return perspective for you as well?
Yeah, no, I think there's 2 points there that I think are pretty interesting that we talk about internally at KB. Is for some of the companies right now that are seeing quite a bit of success as a result of kind of the lockdown and the pandemic, I guess we talk a lot about is that a durable and enduring type of growth? Why or why not? And how does this change, I guess, as we come out of this?
Yeah.
So that's one thing that we talk internally a lot about. I think it's still very hard to predict. I think it's impossible to predict, but I think that's something that we try to get pretty comfortable with. So that's what I would encourage, some startups as they think about that. Like, how do you talk about post-COVID as well, kind of as the next phase of the business? I think the other interesting thing, I've had a few conversations, very anecdotal, with a few doctors as well, and seeing, interestingly, right, like these are teams of people that are under a ton of stress right now. You're having to manage team communication, team culture, in some ways load optimization, like who is under duress, like who's tired, like who can't work. And I think, like in traditional sports, technology that allows that to be managed a little bit better is actually getting a lot more interest. And so I think there are, technologies or platforms that maybe have originated in elite performance or top tier sports that are starting to be used in the healthcare sector specifically. And then I think some of that may turn in and go back to the sports space, like how they end up adapting to it. I think you see that in esports as well. There's a lot of, ways in which you engage with the technology that traditional sports also takes back into account. So I think that's something that is pretty interesting. And I think there are some companies out there that are engaging with healthcare systems. They were originally for elite performance or for teams and leagues and stuff like that. And now they're like, hey, there's an opportunity here to actually use that technology in this space where these, healthcare workers are experiencing in some ways, the same sort of stress and need for team, collaboration. So I think that's pretty interesting.
Yeah, definitely. That's the the spillover effect of in other industries that we were mentioning earlier. So listen, Lance, we'll jump with Esri right away, but maybe as a wrap up, what's the main tagline, the main advice you give your portfolio companies, or would you give any kind of sports tech company that's right now? We have a lot of founders on the line, and I see in the comments they're sharing, I'm an esports performance and health tech startup, love to connect, or interesting field. What would you tell them?
Well, if they want to connect, right, like shoot us an email. All our emails are on the website. Find us on LinkedIn, on Twitter as well. So
you're open to conversation.
What's that?
You're very much open to conversations.
Yeah, no, I think that's one thing that we enjoy the most about the job. And then other than that, I think I don't have a lot of great advice beyond what's up. There are a lot of talking heads out there that give a ton of advice on, how to get through this. I think, have immense respect for the startups that are having to make these tough decisions right now and how they go about it. And I think leaning on, your investors, some of your advisors, like now's the time to tap into that if you haven't in the past, because everyone is pulling for you to do that and to come through it on the other side. So I think, tons of respect for what startup founders are navigating through right now. And if we can be even a small bit helpful, let us know. But looking forward to talking to a bunch of people.
That's good to hear. Well, thank you so much, Lance. Thank you so much for joining today. If we have any on the line, if we have any more questions, we'll bounce back to you. But we're gonna stay safe in Chicago. I know the situation over there is sometimes a bit tricky. So stay safe and healthy. Thank you so much for joining, and yeah, it's positive, open to conversations.
Thanks, Ken. Appreciate it.
Thank you, Lance. Appreciate it. Moving on with Esri Vidra, which is the managing partner of Reimagine Ventures. I'd like to welcome Esri. Thank you so much for accepting our invite and joining us today. And I'll let Owen Simanian, our founder, moderate this conversation, but welcome.
Thanks, team.
Amazing. So first of all, it's Isaac, yeah. It's
Without the R. Sunday morning. It's like Sunday morning, but thank you. It's short for Ezekiel.
Ezekiel. Okay. Correct me if I'm wrong. You know, I used to be a football referee in the top league, and my last name is Simanian, which in Hebrew sometimes is difficult. So my father opens the newspaper on Friday after the match. It was the second when I used to be in the second league, and he says, instead of Simanian, they wrote Chimchian. I told him, what can I do? He said, give me the journalist phone number. I said, Dad, I don't know him. But they got used to me in the first league, and then they
no worries. I know.
So,
you know how it feels. Then you know how it feels.
Oh, absolutely. So first of all, it's a pleasure to have you with us. As I know you, we know several years. So I will start. First of all, tell us about your combination, sports and tech, and maybe I will surprise the guys that they a little bit know you. Tell us about Tech Bikers, first of all.
Sure. So Tech Bikers is my labor of love. It's a community volunteer-led organization that brings together the startup ecosystem around long-distance cycling rides to build schools and libraries in the developing world, supporting an amazing charity called Room to Read. So far, we've built 10 schools and about 51 libraries in places like Nepal, Vietnam, India, Cambodia, Bangladesh, Tanzania, and there's over 500 people from the community participating, from VCs to executives, founders, CEOs, etc. So unfortunately, because of COVID-19, we had to postpone some of our events, but we still have at least one in the horizon planned for September, and fingers crossed that things get better by then. So that's my labor of love. I'm not an amazing cyclist, but I have legs and I don't give up. So it's really fun to do long distance.
Yeah. I can say that you also have a good mind and you don't give up. So tell us a little bit about that side. So first of all, I encourage you guys to join on LinkedIn and to explore a little bit about this initiative through that. And we'll send the link soon if Fernanda or Tomer, team, Talo, someone you can throw his link. So share with us. Who are you? I can talk for hours, but
let me tell you about Reimagine Ventures, maybe to kick us off. So Reimagine Ventures is an early stage venture capital fund investing primarily in software around the intersection of entertainment, tech, and sports and commerce, I would say, broadly defined. So we took an approach that essentially there's a few experiments going on right now with technology, especially during COVID-19. One of them is sort of like the remote work experiment, with essentially every company needing to work from home and adjust these new measures. But at the same time, there's another big change that happens with us, and it's a forced experiment in entertainment, or how we spend our spare time. So we are interested essentially in all the things that you do outside of work, and we invest in those categories. Traditionally in early stage seed or pre-seed companies, with a spotlight on Israel, but not exclusively on Israel.
I must say that I'm a little bit jealous. You know, you come, you sit in the office, and all day you see, funny things that people are trying to do, and they're not working. So it's not bad. How is this situation? Of course, it's a common question to ask. How is the situation of COVID-19 actually affects your decision making, maybe your LPs, and so on and so forth?
Yeah. So we are structured in a bit maybe an unusual way. Some of our investors are corporates in this space. Some of the largest companies in entertainment, in sports, etc. Like one of them is Sky, which has Sky Sports. Another one is ProSieben, which is a large German broadcaster that has large sports operation in Germany, and also esports as well. And I don't think there's anyone that's really immune for COVID-19, the virus, and then certainly not to the COVID-19 economic impact. But luckily, I would say in entertainment and gaming, the impact has been mild, with people spending more time at home and consuming more content, playing more games, etc. So for us, we're pretty fortunate in that sense, but we still are bracing for impact. We're working very closely, like Lance mentioned, with our portfolio companies to help them navigate this particular time, which basically makes them do certain adjustments.
So first of all, I'll add that if someone wants to ask something, you can write on the chat and I will pick a few of your questions. To jump on that, so you have a lot of experience, your past experience, both from Google, but not also working with a lot of entrepreneurs. And this kind of roller coaster of success and failure, and these times, how do you see your experience as the manager of the fund to support entrepreneurs when you're coming from an entrepreneurial background?
Yeah, so I guess that I had a chance to be an entrepreneur. I had a chance to be in corporate and to be a VC with other hats as a partner at Google Ventures. What it gives you, this experience, is perspective. So for me, it's not my first crisis in tech, and I guess first and foremost is the focus on people. So this is impacting everybody. Some companies where I'm on the board of, had like 4 to 5 people infected with COVID out of a company of, about 20 people. So it's pretty significant, and it's impacting people in a very personal way. It's like changing completely their way of lives, their families. They can't see their, their parents. Like some people are waiting to have kids, and it's a very stressful time for everyone. And I think the first thing was sort of like to check in with everyone on a personal level and support them with their specific needs. Now, of course, that also translates into how they communicate with their own teams and their own personnel. And as Lance alluded to, some companies had to make some very tough decisions and let people go, or find other ways to extend runway, salary cuts, etc. So it's supporting them with basically what adjustments need to be made. But the other thing I would say that perhaps my background has helped me in this time is really not to stand still. Even though it's a very uncertain time, it's certainly not a time to do nothing. And the motto that I would say is very fitting to these times is open for business, but not business as usual. So, whatever got you to this point can't continue to be the plan. And, we have to make changes. So let's understand what the impact is on your KPIs, what the impact is on the go-to-market, on hiring, on different things that we have to do. And it's not like one size fits all. So for every particular company, you have to take particular measures. It's not like everyone did the same thing.
So there is a common feeling by the startups in the streets that now people are very much careful and tight with the money, and we are about to raise 2 million in a valuation of X, and the feeling by the entrepreneurs is the valuations are going to go down now. So how do you reflect to that in the feeling? Is it in general, is it right? And what would be your recommendation for entrepreneurs? Like any investment you can take it now, wait a little bit, try to negotiate by X, Y, or Z?
Okay, there's a few questions in there, and it's going to take us some time to unpack. So let me at least try to tackle one or two. Yeah. First is, if you don't take my word for it, right? If you look at sentiment surveys done by other funds or industry bodies or McKinsey, definitely you can see that the market has changed, right? Like we're not. Someone said like the best time to raise a seed round is 3 months ago. Like we're not. It's not yesterday's business, and it's not to say that it's an artificial change. I think there's a very real change unfolding that is still sort of like in flux, right? Like startups are making massive layoffs. In the US, it's like 30,000 and counting. There's limited liquidity on the side of some VCs, even though there's a lot of dry powder. A lot of that is tied to essentially reserves for existing portfolio. And there's a certain caution of like, yes, you know, everyone is continuing to invest, but the bar has gone slightly up, and there needs to be a fit with sort of like the new reality. There's some other structural reasons to why venture capital is sort of like flexing a little bit, but you can read my blog, VC Cafe. I wrote a long blog post about it yesterday with how the impact is in the US, UK, and Israel. So we know that there's going to be a contraction of sort of like venture capital investments in the short period. And because of the market impact in the public markets, there has to be also an impact on valuation. So sentiment analysis or surveys done by an NFX, for example, show that over 60% of VCs and also a large percentage of the founders, I think it's like 50%, believe that valuations will go down, and there's a range. But I think it's also the way to think about it right now is not so much like let's optimize for valuation, but let's optimize for survival, right? And it's not to say that you should take any term sheet that comes your way. There's a bit of like bad practices coming to resurface. Normally, when the market is very strong, it's an entrepreneur's market, and the terms tend to be very vanilla, you know, like no changes in term sheets, etc. Some investors might take advantage of this situation to put some, you know, draconian terms in term sheets, and I would not take any term sheet under every circumstance. I would say like most VCs understand that this is not one time game. This is you know, multiple rounds, and you have to collaborate with other people. And if you accept terms that are going to be very difficult to change down the line, it can hurt the chances of the company to raise additional money further on. So I would say be careful, be cautious. But yes, I would say valuations are definitely coming down, and one should consider that. And if you think about it, if you manage to raise money on yesterday's valuation, on a relatively high valuation, the challenge that you're going to have is not the current round, it's the next round. Because when you're out to raise money again in 12 to 18 months, you might find that the market, you know, you weren't able to double the valuation that you were able to get in your seed, and the market is not paying those prices. So I would say, think for the long term, optimize for survival, try to get minimum of 12 months runway in whatever round you're raising. I wouldn't do anything for less. Ideally 24 months, but you know, beggars can't be choosers. So 12 to 24 months is in the range. And ideally, I think more than ever, it's important to find value add investors that understand not only your business, but your industry, and have the network to support you in whatever you need, you know, like go to market, recruiting, further follow-on funding, etc.
That's a good one. Thank you for sharing that. If I will let's assume that the audience are all your portfolio companies, and you are, after 2 weeks in the COVID situation, calling them, having a Zoom and saying, guys, I have, I would say 2 to 3 tips for you. You have some money in the bank, as you said, like try to look, one of them, blatant one you actually gave us, don't think about the next, try to think about survival. But what would be the immediate one, like SOS ones that you will try to pick and throw?
So I would say number one, it's a marathon, not a sprint. If we stay on sports, this is not a blip. This is not like a 1 quarter and everything's going to be okay. Hope is not a strategy, and you have to plan for the long term. You have to show how you can extend your runway and try to plan backwards, meaning like if you have 12 months of runway, it means that in 6 months, probably you're going to have to start thinking about raising. You don't want to get too close to that line. You know, what are the KPIs that you would need in order to raise that round? So number 2 is, you know, survival, more important, almost above anything else right now. So, you know, I think it's basically like try to understand what measures you need to take in order to create that runway or increase revenue or create more stickiness with your customers or change the product roadmap to reflect the new situation. Again, if you made no changes, it means that you're still planning for yesterday's scenario, which might not be the case anymore. And then finally, I would say that it's important, like, traction and revenue, I think are more important now than ever. So try to understand how you make the business sustainable to some extent, or show growth in your traction, so you're not purely financing the business with external capital that might become less available in the next foreseeable future. So it's not to say that sacrifice product development or the big ideas for immediate money-making schemes, not at all, but think a bit more commercial and think like, how do you get closer to the customer or build a product that people really want?
It's a good one. It's a good one. Thank you for sharing that. So I want to see people smiling, and I will jump into being a little bit optimistic. And generally, which sports tech verticals do you see that are going to gain a momentum now and present interesting returns in the close future?
Yeah, so we are very interested in esports, and have been for a while. We write content about it. We bring the top esports industry people to Israel and organize events about this. And we also made a few investments in this space. So esports is one that I believe is still relatively in its infancy. Of course, there's some challenges to solve there, but I would say that's as an umbrella, there's a lot of things that enter inside that esports. We don't invest in teams. We focus mainly on software. So everything around sort of like the streaming experience and fan engagement and training, I think, is interesting. Monetization of esports, etc. But for us, it's not so much looking at verticals and trying to put an umbrella around it. It's more like looking at technologies and what opportunities those technologies open. So for us, AI, machine learning, and computer vision are very, very interesting, and they create new opportunities, new businesses that weren't possible yesterday. That hasn't changed. We also invest for the long term, which means, we're seed investors. So on average, you're talking about minimum 7 years for a company to exit, or, average 7 years. So, this is, of course, a challenging time, but we're looking at the future. So we're looking for those entrepreneurs that are either already living in the future and saying, like, how come this doesn't exist? Or they're standing in the present and saying, like, I know where the puck is going, and that's where I'm going to be. So, we're looking at these technologies at the intersection with sports. And I think that every time we get excited about cool combinations of things.
So
like
share with us one cool product that you invested lately, and you think that is going to grab maybe momentum at this time?
Sure. So one of the companies we invested is called Novos. They're an esports training platform.
Yeah, we actually hosted them.
Right. Great. So you don't need to hear about them, but these guys are really cool. They're really disciplined in the sense that the temptation as an entrepreneur is to say, like, let's say that you say, I want to start a startup in esports, and it's going to be a training startup. You want to just immediately start writing code. And what these guys, I think, differently is they really try to understand what is the right product for the market. And when it took them a while to get it out, but when they finally got it out, you see, like, everyone is raving about it because it's exactly what the streamers and the top teams and the players wanted. So I'm very proud of the work that they've done and how disciplined they've been in sort of like proving hypotheses and moving forward. Another interesting company we invested in is called MatSkill. They are still a bit under the radar, but this is an expert team from the gaming industry that is bringing some of those expertise into the esports and streaming world. And I'm very excited about what they have to offer, especially today, the viewing experience when you're looking at someone streaming on Twitch or the new Facebook platform or Mixer or whatever you get your streamers. It's a very passive experience, right? Like you might donate to the streamer, but you're basically watching and not much more. And I think in the future, in the very near future, already today, you would want to have a more lean-in experience where you can actually participate in what's going on and have some gamification around it. And this is what the team at MatSkill is building. And again, they're experts in gaming, so they know exactly what they're doing.
So is it true that many of the VCs actually transform and they are doing Zoom kind of, I would say, meetings? So how does it look? What would you recommend now an entrepreneur to prepare for a Zoom meeting with a VC?
You know, I think it's a difficult time because social distancing and lockdown doesn't, you know, there's no serendipity in meeting people on the street or in an event, and you can't approach someone and say like, hey, you know, like nice to meet you. So we are trying to remove a bit of this velvet rope when it comes to access to venture. And it's true that, you know, that fundraising has become more difficult, but I don't think access to venture capital or to advice should be more difficult. So we started offering virtual office hours. We do this on a weekly basis. If you go to our LinkedIn page on Reimagine Ventures, we post a link there regularly. And essentially, we take a few hours a week speaking with entrepreneurs, just trying to share advice and best practices. And we're very approachable. You know, you can reach out to me on LinkedIn, on Twitter, etc. And I don't think that it's a matter of access, but it's true that to receive investment at this stage, when you can't meet with people face to face or meet the team, Zoom has become essential. We have yet to do a fully remote deal, but we are still doing deals, and the last one was a month ago. So this is it's a new adjustment, but it's something that we're actively working on as well.
So we'll finalize with optimistic, I would say, sentence on your side. Share with us something that will, again, keep us happy with our long way of innovation and entrepreneurship. And we all know that sport will come back one day like it used to be. When, we don't know, but in a way, try to make our life.
Yeah, so I guess this advice is timeless, but you know, there's never been a better time to start a tech company.
Absolutely.
It's I think now it's even more true than ever, but there's an actual combination of things that makes it true. Like one is technology, you know, is advancing at a very rapid pace. And as I mentioned, AI, machine learning, computer vision, combined with sports and with other areas create very interesting opportunities. There's also going to be more talent available. So, you know, because these layoffs affect many companies, big and small, you're going to have a lot of talented people thinking about their next step and thinking about how they want to spend their professional lives. And I think we're going to see very interesting companies come out of it. Of course, it's a new reality that those companies will adjust and be built, designed by the new reality. So I think, you know, you need to sort of like hold your breath for a second, you know, understand things have changed, and then think about where the opportunities are. And there's going to be plenty to take advantage of.
Woo, that was amazing. So guys, join me, open your cameras. Big applause for it was a terrific conversation. Of course, it's recorded. We were going to share it. I think that the insights, the inputs you gave us are super important for entrepreneurs, for other fund managers, and for the general sports tech and sports ecosystem. And we'll share your LinkedIn on the chat if people would like to approach. So Tim, back to you.
Yeah, you know, it's hard to follow up to this insightful conversation. Thank you so much, Israel, for sharing those insights. I think this was very valuable for everyone in the audience, from the sports and tech investment, from the company's perspective. So thank you so much for joining in. And actually, just to bounce back on Novos, you know, we actually integrated we integrated them into the athlete development session, because we consider, you know, esports athletes as the uprising athletes. So very great company out there.
Wait, someone is calling me from the IOC. No, it's a mistake. It's a mistake.
Thank you, Izzy. So guys, that's a wrap. I don't think we have any questions on the chat, but I want make sure you book 2 weeks from now, on Thursday, May the 14th. We'll see you for another session. We'll actually be a special edition of the Global Sports Tech Talks with the demo day type of talks. So we'll release more info about it in the next few days on our LinkedIn channels. Fernanda shared with you our LinkedIn. Please make sure to follow it to be updated with the latest news. And again, would like to thank you for joining. We're actually having people from all around the globe, different time zones, from India, the US, Israel, UK, all around. So thank you so much for joining. And it's very important to keep on the community alive. So
I will add to that, Tim.
Yeah.
Before you end, I will add to that, and I will reflect. Entrepreneurs, please be aware. We're going to share some insightful information for you. As for the date and for the exact information, it will come. But it is a super important session for entrepreneurs and, of course, for investors.
Yes, of course. So please book in 2 weeks, same time, same day of the week, Thursday, May 14th. See you there, guys. Thank you so much.
Thank you all for joining.
Thank you
very much.